Alright, so let's begin the show, and today on the show I have with me Gautam Kalia, Senior Vice President and Head Super Investor at Sharekhan by BNP Paribas. Gautam, hi, good evening and welcome to the show. Alright Gautam, so first thing first, let's begin with the SEBI Board outcome that came in yesterday, and today everywhere, whether you go on any social media website or any other channel, they all are talking about SEBI Board outcome and trying to decode it for the investors. You've also have collected a long list of explanations that our viewers today need to know, but then let me begin with what's the outcome, the main highlighting decisions that have come out from this meeting.
Sure, Kavita. So, key takeaways is that the new asset class for HNIs has been announced. It's going to be called investment strategies with a minimum investment of 10 lakhs. The SEBI has also provided some clarity on the advice given by registered investment advisors, as well as relaxing certain criteria because they want to promote the RIA bit. They want to make it easier to do business as an RIA. The next is obviously the MF Lite framework, which is a light touch approach managing the passive fund management from existing as well as new players. That is to promote again more new entrants coming in to on the passive side, on the index fund side. And they have also increased the gamut of the T+0 settlement cycle, saying that right now we are at 25 scripts. We'll take it to the top 500 over time. And finally, on the institutional mechanism, where they are putting in more controls in place, more oversight. AMFI had also come out with something similar. But SEBI is now talking about more controls in place, better, more governance on employees trading in mutual fund securities, and essentially to prevent insider trading, at mutual fund houses.
All right, Gautam, let's take sure. Yeah, these are the key takeaways. Gautam, let's take it one by one and let's begin with the new asset class. So it's going to be a very well regulated product and something between PMS and mutual funds. I think it will be called as investment strategies also. It won't be named as a regular mutual fund or any other specific fund specific name that we usually see. So what is this new asset class all about?
So the new asset class is basically provided to counter a lot of these issues happening where people are providing packaged products or trading strategies or investment strategies with derivative positions in them, with hedging in them, with futures and options baked into the product, and those are not really coming under the regulator, and there is scope for mis-selling of those products. There have been complaints going to the regulator that there is some mis-selling happening there, and investors are being misled with such exotic, so-called exotic investments. So they said, let's just bring that under the regulatory framework and make that available to investors. So it will be a minimum investment of 10 lakhs, not like the Aam Aadmi product for like mutual funds, but obviously in between mutual funds and PMS, because PMS they've increased to 50 lakhs. Then it's obviously adding as a bridging that gap between these two products which are there. There are safeguards in the new product provided by the regulators, so there'll be no leverage, no investment in unlisted or unrated instruments beyond that has already been set up. The derivatives exposure will be limited to 25% of the AUM. So these are some of the things that they have introduced as part of this. So, for example, what investors can look forward to is something like a strategy of an inverse ETF, which they had mentioned, SEBI had mentioned in the consultation paper as well. Inverse ETF is essentially a bet on the market where you feel that the market is going to go down, and you'll make money if the market actually goes down. So right now, if you have a bullish view, then you've got all these plethora of investments to choose from, but you don't really have those many options when you have a bearish view on the market and you want to make money off it. So inverse ETF is a fantastic example that you could see more of under this investment strategy, product category that has been approved by SEBI.
All right, so Gautam, what's going to be the structure of this? What kind of portfolio are we talking about? What are the other details in terms of this particular new asset class? If I put money in this asset class and the kind of exposure I am expecting, would it be closer to AIF or it will be closer to any other mutual fund across market caps that we usually see? Any clarity on those lines, and also the tax structure, if we have that clarity yet?
Right. So I've not received any information on the tax structure yet, but yes, it will be similar to some alternative investment funds. So you can have like a long short strategy play out. So earlier you had only long short available in AIF. Now this is something here. So with the derivatives coming in, actually in terms of variety and in terms of strategies, you can have a plethora of strategies. And the biggest news here is that you don't have to have a 10 CR portfolio to have 3-4 different alternative investment funds in your portfolio to take advantage of these strategies. With a 50 lakh portfolio, you can put in 10 lakhs each in 3-4 of such products and get exposure to different type of strategies that were available only for 1 CR and above earlier. So that's really exciting. And there's a lot of innovation here. So, waiting to understand on the tax part. My understanding is that the tax part will be similar to mutual funds, but let's see what happens there.
But Gautam, do you think, are we ready for that kind of innovation? I mean, of course, the ticket price was a concern, and making it come down to 10 lakh rupees is definitely going to be helpful, not only for, retail, not, but then super retail, if we talk about, can be interested. But see, there is an element of risk also involved. We are at a stage where we are, you've been a regular guest on the show as well. We have to educate investors on having, stepping up their SIPs. I'm talking about general basic homework and learning and education that we have to do. And here we have a new category where, as an option, innovation, definitely it's a very good way to get into it. But do you think it's going to be helpful? Do you think it's going to be like well caught up among investors also? Will we see this particular investor class, investor base, and these kind of investor trend growing? Are we prepared for it?
It's yes and no, because when you look at what happened in 2021, 22 during the Bitcoin boom in India, or if you look at all the studies that show how retail investors are losing money in F&O and the kind of volumes that we are experiencing thanks to retail participation in the F&O space, I would say that there is definitely this huge appetite there's a huge complexity bias. There is a huge appetite for complex ideas or some, let's say, evolved ideas. So there are a lot of investors looking for something which is a little bit more sophisticated. So yes, there is room for a market like this, and I believe that this is a right step. On the other hand, you're absolutely right. There is a lot of learning, there's a lot of knowledge and experience that needs to be built. Investors in mutual funds still, think of gains in the mutual fund space as short-lived. They don't understand essentially why they're investing in equity. They want to buy a house with it. They're not looking at it from a truly 30-40 year perspective of wealth creation. So I think there is a lot of effort required to be put in educating new investors. But I think this is normal in any new market, in any developing market where so many new investors are coming in on a regular basis. So all in all, I think it's a big plus, especially for people who've been invested in mutual funds for the last 5-6 years. For them, it will be an excellent option to add to their portfolio.
All right, Gautam, let's move to MF Lite. So what are the requirements and new rules as per this particular investments in passive, I believe?
Yes. So why they call it MF Lite is they want to have a light touch from a regulatory standpoint. So relaxed requirements related to the eligibility criteria for sponsors, including their net worth, their track record, profitability. They've relaxed the responsibility of the trustees, the approval process, as well as the disclosures. So essentially, they're making it significantly easier for a new entity to come in and set up shop when, as far as passives are concerned. And at the same time, they are talking about, increasing the regulatory oversight and strengthening the framework to prevent insider trading and, bringing in those rules. At the same time, they are providing this relaxation, and this relaxation actually works not just for new entrants, it also works for existing players who already have like a separate department running the passive piece. So it becomes easier for them, it becomes less expensive for them, and hopefully that less cost of this oversight, compliance, governance will then get translated to lower benchmark errors. You'll see a closer benchmark hugging index products and passives coming in. So that's definitely going to be very helpful for investors. And it works even better because I believe if we are to go to a developed market scenario and we look at the kind of AUM that passives and index carry, they command the larger share, significantly larger over actively managed. So this is a fantastic step taken to increase this. Obviously it's going to expand, so just bolster this space. So a couple of points here. SEBI has said that existing AMCs can hive off the respective passive schemes, so they can have an active piece separate and the passive schemes separate if they desire, or they can keep it within the same entity. But obviously they'll be subjected to more relaxed regulations. But if they hive it off, also they have that option to do that. So the approval process is also simplified, and the disclosure requirements have also been reduced. So all in all, I think it's a fantastic. The direction taken by the regulator is really good.
Gautam, one last question on this particular topic, and then we move on to our viewers because we have a few viewers connected on the phone line already. So SEBI has also provided clarity on the scope of advice given by RIAs, and there are some norms which are relaxed also. So just in a nutshell, what has come out for RIAs here?
So very quickly, RIAs cannot offer services like estate planning, will and tax, because those are not products regulated by SEBI. That's one of the clarifications. But then if they want to do that, they'll have to create a separate entity and maintain an arm's length distance to be able to do that, which is essential to a comprehensive financial plan. As well as, people who provide ideas, stock tippers, what they call, people who provide ideas on stock trades, they cannot call themselves just RIAs. They'll have to obtain a research analyst license. The other part is that they've relaxed certain norms. So I think they're going down the LIC agent route as far as RIAs are concerned, that they want to encourage more mass adoption of the RIA license, and more people becoming RIA, signing up and spreading the word. So they've reduced it in terms of you just need a graduate degree, you don't need to have prior experience. There's no recurring exam, only on the incremental changes. You'll have to get some additional licenses, certifications. The number of clients that you need before you have to corporatize is now increased from 150 to 300. Insurance agents, CAs, other professionals like teachers can do this as part-time as well. And they've also provided some directions on the revenue that can be charged in terms of percentage, which is 2.5% on per annum on assets under advisory, as well as fixed fees, which is 1.25 lakh per annum. So these are quickly the changes that they've introduced.
All right, so that's in a nutshell for all the viewers and investors that's come up from SEBI Board Meet.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits, and then break right through them. Become something more. It's my time to rise.